Hello, everybody, and welcome back to another episode of Adam Bergman's Money Makers, where we talk everything personal finance and try to go down this road together that leads to a better path, not only for us, but our future kin or our current kin, building generational wealth. That's the name of the game. And as much as I love to speak about money-making plays and love to see where the values are, sometimes you just have to look around and say, wow, our economy is so effed up. And this is kind of what's happening right now. And let me stress this is actually what's happening right now. So I am gonna give you a couple of plays in this type of society, in this type of economy, in this type of day and age. But I just wanted to say, literally, go into any grocery store, go buy your basic necessities, your eggs, your milk, your cheese, your paper towels, and your toilet paper. What are the prices? It's by far more expensive than it was last year and probably by far more expensive than it was 2 years ago, which means that we have crazy inflation. Crazy inflation in itself is not really a bad thing. It is bad, don't get me wrong, but there's a couple of things that lead to this crazy inflation that are even worse. What is these crazy things that lead to this crazy inflation? Bottlenecking and supply chain issues. Well, that's what we have right now. Huge constraints on the entire economy. So people like Adam, well, what does that mean? I don't care about that. You should care about that because it's a trickle-down effect. If huge companies have bottlenecking, that means that they need to charge more money for the same cost and goods, for the same consumer goods. Now the consumer has a choice. Do I buy A or do I buy B? B costs more money, but this is what I'm always accustomed to, and it's slightly better than A. But I'm willing to pay that amount because I want something better. However, now B costs so much more, it's not worth it. The trade-off between price and quality or bang for your buck is not worth it. So I'm gonna buy A. The company that now produces B needs to start laying people off because their bottom line is hurt. This is called pricing power or the inability of pricing power, which means you can't just charge whatever you want because there's a tipping point that people will not pay. This is kind of what's starting to happen. Now, you have huge companies like Amazon that reported earnings and they are down 15%. Let me just say something. Amazon is down 15%. That is the equivalent of about $250 million. Let me restate that. $250 billion was lost today from Amazon. This is the worst day that they had in nearly 15 years. I think the last time they had a day like this was back in 2007. There are companies that are reporting massive earnings like Microsoft, like Tesla, like Nvidia, like Apple, doing really, really good jobs, and still the stock is down. In this video, I'm planning to show you a couple of these stocks, and I'm only gonna go over the mega stocks, the FANG stocks, or the top 5 companies with the top 5 market caps. I just want you to understand what the heck is actually going on with our economy. And you can see how they're hurting. That, in addition to the Federal Reserve that's raising interest rates to try to curb this inflation, is getting out of hand or getting more hawkish. We always expected 25 basis points, which is a 0.25% raise. However, they said it will probably be a 0.5 raise. Now there's rumors circulating that it's going to be heavier than that at a 0.75 or 75 basis points. All of this also has effects on the bottom lines of all these mega companies that are literally the backbone of United States economy. This is USA big business. So if they're hurting, guess what's gonna happen to all of us? We are having, honestly, the worst stock market, period, in many years. Now, yes, it all depends on what statistics you wanna look at, what numbers you wanna look at, what segments you wanna look at, but make no mistake about it. If it's not the worst point in the stock market that we're having, depending on what indices you're looking at, and give me a moment, I will look at it, it is most definitely up there with some of the worst possible times you can be in stocks. I'm gonna show you some numbers right now, and it's gonna be sickening that we are less right now than we were a year ago. Matter of fact, in a lot of cases, we're doing worse than we were doing before the pandemic. This is a very scary time, And you guys got to brace for impact because I honestly do think that it is going to get worse. It's not clickbait. I'm giving my own personal opinion. Let's look at a couple key metrics, shall we? This is an article from the Wall Street Journal. It says, Tech rout drags NASDAQ to worst month since 2008. Tech-heavy index slid more than 4% on Friday, bringing in losses for the month 13%. 13%. The NASDAQ dropped 4.2% Friday, bringing its losses for the month more than 13%. It's the worst showing since October 2008. Do you remember what happened in 2008? That's right. Nearly the entire collapse of our economic system, not only in the United States, but the entire world. That index was down 21% in 2022, its worst start to a year on record. The index is down 21% in 2022, so 13% in 1 month, 22% for the year so far. 1 quarter, down 21%. It's the worst start to a year on record. Listen to the sentence I just read. It is the worst start to a year on record. So again, depending on what you're reading, depending on what you're gauging, depending on what sectors you're looking at, and depending on what key metrics you're looking at, this is one. It is the worst start ever in the stock market. Tell me if that makes sense. And the worst start ever in what? The tech sector. And the tech sector is the backbone of the United States. This is what's leading the way, right? It's not cyclical, but it's the future, looking towards what's gonna be in the United States. So if the tech sector is having its worst start of the year ever, what does this tell you? What is about to happen? I truly do believe we are currently in a recession, which we're gonna find out about next quarter. Quarter 3 will tell us quarter 2. Quarter 2, where we're in now, tells us about quarter 1. We're gonna have negative GDP. The broader S&P 500 has fallen for 4 consecutive weeks, 4 total weeks, shedding 8.8% in April and bringing its year-to-date losses to 13%. Guys, this is the S&P 500, the strongest 500 companies in the world. The Dow Jones Industrial Average fell 4.9% this month and is down more than 9% this year. So more than 9% is close to 10%. So let's say that all the indices are down nearly double digits. That is absolutely ridiculous. Now, that's not the same as your company is down 5 or 10 or 20%. This is an entire freaking index, which means this is how you gauge a certain sector or certain portion of the United States economy. Do you understand where I'm going here? I'm not fear-mongering here. I'm just being as real as possible. And I think you guys need raw, hard data and real analyzation and not just cheerleading. It's very easy to say, yeah, everything's gonna be okay. It's very hard to be real. When you say everything's gonna be okay, everybody's like, yeah, you're the best. Likes, subscribe, shares. When you say, listen, brace for impact, people are like, you're called a fudder, you're ridiculed, you're laughed at, you're unsubbed from. And nobody puts comments down below except for hurtful comments. But part of making money is offense, but part of making money is defense and knowing what to do in an economy. But you can only know what to do, whether right or wrong, by following the actual stats. And if nobody's reading this on a daily basis, and most people are not paying for these journals, I spend hundreds of dollars a month to get all these subscriptions so that I could give you all of this news. Within a few months, some of the most reliable winners morphed into losers. Netflix dropped 49% in April. I can live with Netflix. Nvidia, 32%. Nvidia had an amazing earnings. They just announced that they have a $1 trillion total addressable market. You cannot get better than Nvidia. Yes, there's some sentiment that says that Nvidia is going to slow down in growth. There's going to be less chip demand. I don't believe that. I made my thesis for the other case, and I have a video of that. If you guys want to watch it, I'm going to link it at the end of this video. But Nvidia's an amazing company, down. PayPal, 24% down. It's absolutely insane. Worries about the Federal Reserve raising interest rates, soaring inflation, and a path to the economy have brought stocks sharply lower from the record levels at which they started the year. Many pandemic-era winners also have come falling back to earth as consumers' tastes have evolved since 2020. And recently, earnings season has been dotted with some high-profile disappointments delivering head-spinning one-day movebacks following the reports. Amazon shares fell 14% on Friday, their biggest one-day drop since 2006. Guys, 2006. It's the worst day since 16 years. I said 15. 16 years. Guys, this is the first time I'm reading this article. I'm doing this live, so I'm shocked as much as you guys are. The company posted its first quarterly loss in 7 years. As a result, that reflected broad economic trends related to a slump in online shopping. Well, why are people buying less online? Because of inflation, which leads to the first portion of this video that I was talking about, that people will not spend money on certain things because the prices just go up. Plus, what happened is people already spent a lot of money with the pandemic, relief funds that people are spending money on stupid shit. That's what ended up happening. So now people are like, well, I don't want to spend money on stupid shit because there's no longer free money, so I'm not going to do that. Well, guess what? There's no free money, and the prices are still super expensive, and now you have no pricing power. You have the opposite of pricing power. You have no power. So people are just cutting you off. People are not buying. Well, what do you think Amazon is going to do if they have a couple of quarters that are going to be down? They have to answer for this. They're going to fire employees. What happens to the employees that get fired? They go on unemployment. What happens when you're on unemployment? You get a lot less money than you're collecting when you're working. Well, if you have less money, guess what happens? You're willing to spend even less than you are now. And guess what happens to our recession? A possible prolonged recession. And what happens after a recession? A depression happens. Just saying, guys. Apple cautioned Thursday that resurgence of COVID-19 in China threatens to hinder sales by as much as $8 billion in the current quarter. Shares fell 3.7% on Friday and have dropped 11% for the year. Last week, Netflix shares tumbled more than 30% in a single season after the earnings reported showed the company lost subscribers. So Netflix, I'm going to take out of this. I think Netflix should never have been valued where it was. I think it was just literally lucky because of what happened with COVID. Not saying that COVID is lucky, but you guys understand what I'm trying to say. So I'm going to take Netflix out of anything that I talk about. But Apple, 3.7%. Apple is nearly a $3 trillion company. Apple does everything right. And they're just saying that they're going to, estimates dropping $8 billion. What the heck is $8 billion for a nearly $3 trillion company? It's nothing. It's peanuts. It's an absolute joke. And still, it's down. Now they talk about Elon Musk and Tesla. And they're saying that Tesla dropped 19% in April, while Twitter shares jumped 27%. You know why Twitter shares jumped 27%, right? Now that I explained to you what I think is happening, and now that I showed you some metrics and showed you this wonderful article that did my job for me, to be honest, I didn't think it was going to be so in-depth. There's not really much that I want to add over there. Let me tell you what I think is a good play. But none of this is financial advice. All of this is purely entertainment and educational purposes only. I think having margin right now is a terrible, terrible thing to do. I personally have margin because I took out margin at the end of last year, and I feel like a total dumbass. But you can't time the market, and sometimes you just gotta live with your plays. It is what it is. I do have a lot of backup plans to fix or ride that wave, so I'm okay. I'm just letting you know that a lot of people that don't have cash on hand might be itching to borrow some money against their current portfolio or borrow some money from the banks. I think this is a bad situation because you don't know how much worse this could drop. A recession or a bear market can last years. Now, all of this can absolutely turn around because we're already getting into some crazy value deals, or this can go down more and more and more. So borrowing money is terrible because you can get something called margin call. It's literally happening to me right now. I'm able to cover it, but it sucks because you do have to sell some of your portfolio, you have to add some money, and if you're not liquid to add that money, you do have to sell some of your shares, some of your positions. Well, then when there's going to be a bull run, you're no longer in those positions, and it really sucks. One of the key plays to do right now is go into your conviction plays. What do you believe in most? Like literally look at your stock portfolio. I'm personally doing it too and be like, okay, this is a great play. This sucks. This is a great play. Not too much for this one. This is a great play. Get out of here. And look at the investments that you should be doing. So no margin. Margin sucks. Stay in with your conviction plays. And if you have cash on hand, don't just blow your load. Buy in week by week or month by month or day by day, whatever you want to do, and dollar cost average going in. Because you honestly don't know where this is going to end. And let's say you buy a share, a share at $100 and it goes down to $80. Well, your dollar cost average down, because if it's at a 52-week low and let's say it's like at 50% of where it was, well, if it goes back to $200, still making a crazy deal. But you're playing a little bit of defense, you're putting on the brakes a little bit to make sure that you don't fall hard if this accident is about to happen, right? You're trying to get out of the way and switch lanes. So no margin, conviction plays, dollar cost average on your way in if you're going in, and if you're going out, consider dollar cost averaging out. Don't blow your load either in selling all your shares right away because you don't know what's gonna happen. Now, on the reverse, all of this can switch like that. Literally Monday, the entire market could be like, yo, this sucked. There's mad deals over here. We're gonna buy in and these things are gonna go to the moon. It's true. Palantir, for example, it's having earnings on May 9th. I'm honestly worried that we're gonna bang out earnings and still the shares are gonna go down because of what's happening right now, because of market sentiment. It happened to Tesla. They banged everything out and they, all their gains, they went down. Nvidia banged things out. All their gains are going down, right? Apple did great. Microsoft did great, and their shares are going down. So you don't know what's gonna happen. But let's say, I'll use Palantir again. Let's say they announce that they have a huge government contract because, Russia and America right now are going head to head. So America just made a $1 billion contract over the next 5 years, and they're going to use Palantir's new Apollo system to be able to integrate all the different departments into the DoD, Department of Defense. Boom, this thing is going to skyrocket. So you honestly don't know. I'm just saying, brace for impact. Things don't look great. I don't know when this is going to stop, and I don't know when this is going to reverse, but my job is not to tell you what to do. My job is to give you statistics and give you data, bring you to water, and show you what or how to do. It's your choice to actually catch that fish and eat your dinner, or it's your choice to turn around and not eat at all. You do whatever you want. However, in markets like this, if you are on the sidelines this entire time and you really didn't know when to get in, this can be a huge opportunity to buy into some really, really great deals and discounted prices. And if the market turns in a day, in a month, or even in a year from now, you're still in such a great price that I'm honestly jelly about it that I can't get in at these crazy low prices. Guys, thank you so much for watching this channel. We're at 426 subscribers. I can't believe we're doing so good. Thank you very much. I appreciate you all and have a great day.